Hey, this is Jeff Scott. This is my weekly video. It's actually the 9th, but I'm not sure I'll post it tonight, so it's got the 10th date. Title New Highs Now What? I'm doing this from LA as I'm on the road again. Shocking alert there. Go ahead and I'm going to start a quick review of the markets, and then I'll jump into some of my favorite programs and see if we can't find anything to highlight as we go through this week. As always, it's for education purposes only. Any recommendations are in the spirit of education, not investment advice. I'm a doctor, not a broker. I'm independent. I paid for my tools, and trading involves risk, and you are solely responsible for any investment decisions you make. I had the opportunity of sharing a meeting with this guy down here, George Lee, in Vegas earlier in the week. And as I talked to the attendees, I like to consider my trading the be your own guru trading. And by that, I mean it's important to have an education, get exposed to smart people, and then come up with your own style of trading. I started with Cancelim as taught by O'Neill, improved by Morales and Catcher, taken to the computer by Ian Woodward, who improved upon it, his partner Ron Brown, John Person, who taught me how to actually make the trades, Van Tharp, position size and money management, and Cigar from Superior Profit, who's got some great tools, both from sector rotation and timing, but also to add to TradeStation or Metastock. I own a lot of programs, but really I need TradeStation and Thinkorswim with my packages that I use with them. HGSI is where I do my most post-market, sometimes intra-market analytics, and then EdgeRater and Superior Profit. The other tools are supportive, but if I was stuck on a desert island, I need the ones that are TradeStation, Thinkorswim, HGSI, and EdgeRater, and Q from Superior Profit. I'm independent, but just to show you HGSI, highgrowstock.com, this is their website. They give a free 30-day trial without credit cards. If you take that trial, there have been some recent videos by Ron Brown of how to use it. And I've got my style, and if you email me at hgsidoc@gmail.com, I'd be more than happy to send you a link to some educational videos of how to turn the program in from a series of buttons to a Ferrari. Under investing strategies, you'll find lots of movies like this one. Stock patterns are cyclical. You really want to load the boat when you start the Weinstein phase 2 or stage 2. During periods of uncertainty and ambivalence, I like to be raising cash. And then when we enter stage 4 of fear, it's time for me to short the market. I've made the comments this year that every time it looks like we're rolling over, we go higher. As it looks like we break out, we tend to fall back. This time may be different. It looks like we're going higher. We've been going higher. The question is, for how long? Because we're in that markup mode, although I am a little bit more cautious than I'd be at the beginning of a bull, I've been going more aggressive, buying stocks and calls, selling puts. I don't do covered calls when I'm feeling very bullish about the market. I do some bull put spreads. So I'm bullish. I've got more positions this weekend than I did last weekend. It was a good week for my portfolio. I'm sure it was for yours. That said, we are deep into this bull market. Sector review on Friday. It was funny. I got in my car in San Diego. I was down a little bit when I got out of my car in LA, which is just a lovely 3 to 4 hour nightmare on I-5 and 405 and other fun highways. The market turned around. I finished up for the day. I got a text from my son saying, "Why did healthcare rebound?" And you can see healthcare over here, mostly green. I think Bloomberg, if he comes into the race, adding another conservative option, may reduce some of the fear about Elizabeth Warren and her impact on pharma, biotech, and insurers. Financials holding up well with the rates rising. It's broad-based green here, but there are pockets of weakness. Real estate had some weakness. Staples, a defensive play, had some weakness. You'd expect utilities, wherever they might be here, to have some weakness as well. And then the other thing that showed surprising weakness to me was discretionary had a lot of red. Maybe that's a little bit surprising to me in the setting of almost full employment, some surprise to the upside on consumer sentiment, and a rising rates. Maybe that's the issue. Major markets tell a story. So very quickly, let's jump into my Thinkorswim. because I do think these are important. If I go down here, I can hit detach or maximize selling. And you can see, looking back over a year's worth of data, that we hit all-time highs on Thursday, finished the week right below those all-time highs, but at new closing highs. That is bullish. You've got the 17-day fanning above the 50-day and above the 200-day. We'll talk about how extended we are and when we have to worry. And frankly, we just took out that line there. So breakouts to new highs on the E-minis, that's got to be considered bullish, at least in my book. The NASDAQ, very similar, broke out to new highs and closed above, up on Friday, although below the high of the day on Thursday. The E-minis, the NASDAQ, how about the Dow? Let's go down, let's go to the maximum here. But you can see the Dow futures also look quite strong. Going back a year, again, high of the year, all-time high was Thursday, and the Dow was actually down a little bit on Friday, sort of an inside day, probably not very meaningful. If I look at the IWM, the Russell is still below its prior high set in April of this year. It's kind of at a point that it's reversed at 1, 2, 3 times since then. So that's got to be a little pause of concern. That said, it had a very nice week, and we'll talk about that later. That is strong on Friday. That's because the VIX is low. I guess when the VIX is too low, look out below. I'll look for the VIX to start moving up, and when I see that, I'll be concerned about my long positions. And the dollar bounced off the 200 ferociously, which won't be good for gold and silver and miners. And you can see a big move retaking the 50. So it's hard for me not to look at that and be bullish about the markets. The issue is for how long and what's coming next, and do I need to be concerned? The weeklies really across the top, the E-minis, the NASDAQ, and the Dow futures really show a nice lower left, upper right, and closing at weekly highs, all-time highs. The Russell, you can get a better picture here how much lower it is in its pattern, especially going back to 2018 highs. The VIX is not as low as it was, but it's certainly come down quite a bit. And the dollar certainly in an uptrend to sideways uptrend market. Now, I like to look at what's underneath, and the only reason I use a PowerPoint here is it's a heck of a lot quicker. It takes me more time. This is a 10-year treasuries on the left, the 30-year on the right. The white is the interest rates, the yellow is the S&P 500, and what you can see is both of those finished higher on the week. And not only did they finish higher, the yield curve, which is here, hard to see in this, but trust me, it continues to widen. And you can see the widening up here as recession risks seem to fade, which is good for the market. The AD lines on both the 2,000 and the 1,000 are at all-time highs. The small stocks clearly are lagging, and as we saw that earlier with the Russell 2000. If I look at the NYSE, here's a list of the ETFs that you have there. And the only ETF that fell on the week, and it fell pretty hard, frankly, is the TLT, the bonds. Well, that's not a surprise because the interest rate's rising. Breadth. Now you might think, well, gosh, we're going to start to get extended and we're going to pull back because breadth is too much. The number of stocks above the 200 has clearly moved up and got above a line that had been a resistance point in the past, but not anymore. But look at the 40, it turned down. So even though our breadth remains strong, I don't see signs here of overbought. And when I look at the 21-21, we peaked and we actually came down. So clearly there's some rotation underneath the top, and the breadth is not giving me a signal to sell. The daily McClellan, the oscillator has a negative divergence. The summation index, a couple more good days, it will take away any negative divergence it might have. And on the weekly, you can see similarly new highs on the S&P, clearly not on the submission index and the oscillator. So that's one potential negative that we've seen. Current buckets, these takes the stocks S&P 1500, looks at the Bollinger Band on each of them, the midline of the Bollinger Band, and this tells me that 68% of the stocks are above the midline. That's very bullish, but not so bullish that the market's going to reverse. And less than 10% of the stocks are above and about 7% below. So even though we have a bullish picture here, nothing that says we're extended with an imminent reversal. If I look at the Hindenburg Omen, this has been my tool to tell me that the market is at high risk. Now, as we start to get new highs, that's when the Hindenburg starts to become of concern. And you can see we haven't had a signal since August on either NYSE or the NASDAQ. Interesting, with the market doing well, the number of new lows started to pile up a little bit on the NASDAQ. And in fact, on Friday, the number of new highs and number of new lows was exactly the same. So is there some underlying weakness that will pop up this week? Well, there's something there to watch and have a little bit of concern. Market, this is the Woody indicator, which is where my arrowhead is, all green as the market's bulls are in control. As I mentioned, again, looking at the sectors, that some of the defensive as well as discretionary are lagging. Canaries in the coal mine, these have not been in favor for some time, but I thought it was interesting to see, that we did approach highs now with a big run up over the last couple of weeks on the Canaries. In fact, we're up 14.5% over the last 26 periods on the Canaries. So the question on top, will it break a resistance here by the Canaries, leave the markets to higher and higher levels? Know your news and earnings. On the left is the news for the week, and it's not a horribly busy week. You got jobless claims weekly on Thursday. You got some energy on Wednesday. You got some trade on Tuesday. But what you have is a lot of Fed heads speaking during the week. So there's always volatility potential when especially the voting members talk. And, I'm sort of at a position where if I had to bet, I'd say we're done with cuts for the year. And I think the market is okay with that. But it's always interesting to hear what they have to say. On the right, for the week beginning November 11th, you can see an extensive number of earnings to be reported. As it says down here, it's a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. Probably the biggest of the week, NVIDIA would be one of them, but there's a lot. You got some airlines, you got some home builders, you got a number of pot stocks, you got some REITs. So you need to know when your stocks have earnings. Applied Materials, which broke out this week, also has earnings coming. So one of the things I've been playing with for some time, and I've actually got it working really well in TC2000, is I'm able to define the high jump and the low jump bar. And I'm setting it at plus or minus 95%. And what that means is when it's red, I know that I'm a 95% higher or higher of the greatest extension that the stock has been going back 2 years. Green, extension to the downside, 95% of the lowest extension to the downside over the last period of time. Then I look for green candle lows and red candle highs, and I'm finding some really cool things. Like here's one I'll probably talk about later, Shopify, which was a huge leader on the way up, has pulled back so hard that this little dot here tells me that it triggered the low jump bar. When I get the low jump bar, I'd expect the stock to reverse. And we did see a bullish engulfing and green candle low occurring on Friday. So that might be interesting. So I've been playing with this. I demonstrated a little bit at the live meeting this past week. My thoughts, market continues to grind higher as the Dow has joined the NASDAQ and the S&P at all-time weekly highs. The Russell continues to lag, but has moved higher, as I showed you. Defensive stocks are lagging. Discretionary are also lagging. News will continue. I missed an S there. I used to know how to spell when I was in school. Well, news will continue, now that it's spelled correctly, to whip the markets, whether it's impeachment, China trade wars, tariffs. Are they on? Are they off? Is he going to ease the existing tariffs? And then what's going to happen with Ukraine? Bulls can be encouraged by rising rates, widening yield curves signaling a strong economy, and we did have a beat to the upside in consumer sentiment this week. As well, seasonality is a friend of the bulls here. We were full last year, but right now it seems the markets want to go higher. So let's take a quick top-down review of the markets. We are getting deeper and deeper in the tooth, so one might expect soon, but not necessarily yet, to come to that point where I might have lesser and lesser stocks meeting my scans. Now, I typically will jump into TradeStation here and go into sort of look at my indexes. And if you've been here before, you know there's about 6 points that I'm going to look for on every major indice. So I'll start with the E-minis. Point number one, am I in a green arrow buy signal? That's a PPS buy, or red arrow sell signal. So on daily, weekly, and monthly, the E-mini is on a buy signal. Check off one for the bulls. Number two, what color? Blue means is an elder impulse indicator that says I could buy or short or hold. Not a real good signal. Green on the weekly, green on the monthly, so that's pretty good. The third thing are these red dots. These are evidence of probable MACD divergence. Now, how do I know that? Well, I know that because I've done this before, obviously. But if I was to do a trend line, and I'm not great at trend lines, to be honest with you, I've got clearly higher highs on the index. But if I go down and I look at the MACD, I'm not getting a higher high on the MACD. So you've got a divergence there, and Elder would say that means decreased participation. I just know that it's a trend that might be getting tired. The reason for these dots is it makes it easier for me. When I see dots underneath, it's a positive divergence, or convergence, as John Person calls it. When the dots are above, it's a negative divergence. Now, the other thing I want to point out is these things can last for weeks before the market rolls over. So that's going to be a little bit of a negative. Where am I within the envelope? Well, I'm at the top of the envelope, so that's less bullish than if I'm at the bottom. But again, we can run up the top of the envelope for a period of time. My weekly bongo is green, and on my high jump bar, I'm at 91%. So that's kind of bothersome. That means the extension from the 1750 and 200-day moving averages is greater. It's the 91st percentile going back the last 200 days. And what I found in the past, and you can look at the high jump bar in here, that when I get up to extremes, here's 94, 92, the market has a tendency to reverse. So we're at a level now where the high jump comes into play. One thing I've learned, extended markets can get, and overbought markets in a bull run can get higher and higher. If I look at the YM, I see pretty much the same pattern, and we're at 85. Still got the dots. If I look at the NASDAQ, same pattern with buy signs throughout, and we are sitting, and look at all the red dots there, at 93%. And if I look at the Russell, you can see the run the Russell's had since it got the buy signal down here. It's at 87. So I think this shows me that we are long in the tooth. Clearly, you can see we've reversed at this level before. I think my concern about potential reversal, maybe midweek, is there. And because of that, I do have playing some wild cards on some of the volatility instruments, seeing if we move up. But I have to admit that typically I get nervous way too early. So I'm still long, but I see things here that might concern me. I showed you before that the dollar firmed as the week went by. Let's see if I can't figure out where to put the dollar. And look at it here, and you can see the dollar had a buy signal come in, but it's still in a weekly sell. So the dollar's kind of, and it's been, as I said, uptrending and sideways, a little bit of each. All right, let's jump into HGSI, and let's go down to the market analyzer groups. Let's look at Major Markets Plus. Let me hit the warehouse view, and I probably ought to take off my filter. a lot of times, just for to let you know that if you're using HGSI and you don't see what you think you should see, you probably got a filter on. So I've got 25 groups here, and I'm going to use the top-down ranking module, and that will put the combo rank. The ones that have moved the most on Friday, a little bit of 5 days and a little bit of 3 weeks, but mostly the last day movement will float to the top. So when I see NASDAQ and small stocks leading at biotech and Russell, I know that my growth stock portfolio did well. So if I open up the S&P 500 to start, and I'm going to do is set my charts up here. By the way, this is in 4K and I'm not using an external mic. So if the sound is muffled, just chalk it up to me being on the road. The other thing I wanted to tell you is I believe on YouTube, once it processes, they will give you different resolutions. But I've decided to move to 4K since not too many people have been complaining, and it makes my life easier because I can get so much more on my charts without it looking bad. So let's take a look at what's really, I thought, was a profound changes this week. And all right, so this is, I just want to get my bearings correct. And what happened this week is we took out our prior highs. So we have broken out, and you'll see this on each of the markets, which is very exciting if you're bullish. Now, will we come back and retest and bounce? That would be bullish too. Maybe with what I saw in TradeStation, I should expect it. But we finished at the highs in an uptrend, not a whole lot to say, so let's move on. The Dow Jones Industrial Average looks the same, so I'm just going to move on. The NASDAQ Composite breaking out as well, and if I was to go back here and look at its numbers, you can see that it too, put that there, broke out at prior highs. So very strong there. And the laggard, as we talked about before, has been the Russell. And you can see the Russell had a great week as well. It's just not yet back to its prior highs, although it's getting much closer. And the highs were actually in 18, not in 19. So it's got a little bit of ways to go. But it had a great week, as you can see. If I look at the dollar, I talked about it already on a couple of different platforms, but just to show you on HGSI, the dollar has, you can see on the weekly, a nice move up. Now, this is the ETF, not the future. And on the ETF, interestingly, it's sort of dangling around the 50, but I think the future had fallen much further back down to the 200. And you can see a new buy signal came in on the weekly as well. The VIX, as I mentioned, has been low. You can see that here. And then just for completeness sake, gold and silver. Gold suffering as the dollar rose. Perhaps it's still in a shallow pullback, and it will gain some momentum and go back onto new highs. But right now, gold is down, and silver is also falling, as you can see here. Now, a lot of us trade growth stocks, and I like to look at the FFTY because this is a ETF that is actively managed of IBD 50 stocks. And if you trade a portfolio that's like IBD 50 stocks, then what should you expect to do? And as I look at this, I see that there's a trading range. Let's see if I can't do something here. Here's the bottom. Here's the top. And oops, I hate when I do that. And at best case, when you do a straight line in HGSI, you're supposed to hit the shift key and the left mouse key, and then take your hand off the mouse. And so right now we're in a sideways at best, but that's certainly better than it felt here. And we have reversed here a couple of times, so maybe we're in an opportunity that we're going to come back up here and retest the highs. If we do that, I think this market will have had a nice move by that time. But we are sideways, and a lot of growth stock portfolios on a year to date are up because of the recovery in December, but are underperforming some of the markets themselves. All right. After I've got a sense of what the market's doing, and my sense is we're going higher, I look at number 7, industrials, and then I'm going to put my 2-day force on it and see that this week we dropped down, but we still have 49 of my groups are having positive momentum. If I go to 2-day down, I could see that 18 groups, so that's a lot higher than the last couple of weeks, have actually started to have momentum to the downside. Apparel, discretionary, airlines, raw materials for steel, power generation, households. There's a lot of groups here that have been working, so that's interesting. So let's look at the 5-day picture. On a 5-day force, I've got 56 to the upside, and on a 5-day force to the downside, that's not the right one, I have 31. So I would say there's, the overall trend of this is still bullish, but it's not necessarily as bullish as it looked like last week when there were higher numbers up and lower numbers down. I then go to my force up 2, and I rank my industry groups, and I like to usually look, and certainly on my own, I'll go through at least 10. I right-click, change the index group, and then I bring them up here. I double-click on this, and it should now populate down here. And I'll look at a couple of these and give you some comments. Clovis is a stock that has been, there's a type of drug called a PARP inhibitor. There's 3 companies that have it. One is AstraZeneca, who's been doing fabulous. Another one is Tesaro, which got bought by GSK predominantly because of this drug in their pipeline. And the third one, which is Clovis, that at one point was a darling and $100 plus stock with all kinds of takeover discussions. And this thing has fallen down to below $5. It had a big move on Friday. When I see 2 kahunas in a row, mobile breakup from a squeeze by Bongos Green, a weekly bullish doji, a daily bullish doji, is it worth throwing some money at this and seeing if you can't get it to run back up to the 200-day moving average, which might be about 10 for a double? I think so. I think that they came out with numbers that were less bad than expected. I think odds are it's going to stay range bound, but could you see a little run here? You could. And I nibbled a little bit at this on Friday. Regeneron is a big company that has a number of products co-marketed with Sanofi and others. It broke above its 200. I look at the earnings per share growth, probably not where I'm going to put my money. Next year, this one had a big move early in the week, now setting up for a flag. When I see moves like that, it usually means there was something good that happened and perhaps some data. And so what I might be doing here is I might be actually looking at, is there some type of a wedge that's going to form, and might I be interested in buying this if it works its way and breaks out of the wedge at some point? So I'm going to watch next year, but I have a hard time just going in and buying something that had a move like that. I do some research. Biotech is news driven. Special Iovance is one that I've liked for some time. Big run up here, then a shallow pullback. Not really a cup and a handle, but I guess I could squint and convince myself. It looks like it's breaking out here. I like this pattern. I don't like its earnings. Again, it's a biotech. It's an early stage with no revenue. Amgen, a big behemoth of a biotech and a leader. This one is much more interesting to me as it is a leader. It's breaking out, but it's probably run too much. I will go down the list to see if anything is interesting to me. This is the best looking chart of the bunch. The problem is Celgene's in the process of being bought by BMS. And if I remember correctly, they're getting cash plus a share. And both BMS and Celgene continue to have great news. Here's a stock where you kind of wonder with its earnings per share growth rate, what multiple would it really have if it was trading freely? I think this is a case where being bought may not be so good right now. I think this would be trading considerably higher. So I'm just looking to see if anything pops out as an obvious thing that I like. And I usually only look down as far as the index. I showed you a couple things. I'm not that impressed. Specialty pharma. And my son did ask, again, I think I mentioned earlier, why did healthcare do so well? Maybe it's Bloomberg, not sure. I think there's going to be a lot of pressure on biotech and payers and big pharma, because whoever wins in the White House is going to have to figure out how to control the growth and spend on drug prices. Guardant Health, George, if you're viewing this, is a diagnostic testing. It's not a specialty pharma. It probably should be in the same group. I'm not sure you got Genomic Health and others in here. Maybe we have to figure out if there's a different group where this should be, but it's not specialty pharma. It's not a drug company. This was a darling, an IPO. It's the forefront of precision medicine, which is a big buzzword in oncology. I wouldn't touch it till it broke above the 200-day moving average. Maybe that happens in the next couple of days. It's a great company. They can do a lot with blood to tell you your prognosis and how to treat. It's the field I'm in. It's sold off. I'd like to see it above the 200 before I get excited. The marijuana, there's a number of these have earnings. If you're bullish on marijuana stocks, you could say it's gone too low. It's time for it to bounce. I'd like to see it bounce before I get excited. Yes, you had a mobile breakout from a squeeze. My indicator, a kahuna, and a pocket pivot flying on Friday. So there was some momentum. Earnings are this week, so that would temper my enthusiasm. Fibrogen, not yet. Nevro looks interesting because here you have a stock that's been in an uptrend, pulls back to support and breaks out. Had a Bible gap up on Friday as well as a weekly HCD. It has revenue, doesn't yet make money. Do some research, but this looks interesting. Something's going on here. That was a big gap up, probably too high for me to chase. And here's another one that had on news. This is what happens in biotech. You get a drug approved, you get some positive study, you get bought by a pharma company or biotech, and you pop up like this. Once it's made the pop, it's hard to get involved. Clearly, you could see you had an opportunity to go back into this on Friday. This one will be interesting. I do have a position in it. This is Amarin. They have a derivative of fish oil that seems to reduce cardiac issues downstream. It's already on the market, but the FDA is considering it as a heart medicine or as heart prevention, which would probably give a big jolt to the shares. So I'm holding it for that. That's due sometime in December. Another marijuana stock. Here's a company that's an early stage oncology company. They have a drug that treats a mutation in KRAS, and they had some recent data at the European Society of Medical Oncology meetings. For those that don't know, that's my specialty. And this is a very exciting company. Now, when I look at, I don't know, I've never met with them, so there's no inside information here. At $4 billion, I might think that they're priced for perfection. Typically, these companies are less than $2 billion. They get a drug approved, they jump up to 5 to 8. So there's still an opportunity for a big move, but they're still early, and I don't think that they have an approval coming, maybe sometime late 2020 at the earliest. Vigene, this is one of those biotech. This is a Chinese company or specialty pharma, and they announced that Amgen was buying 25% of the company and doing a co-marketing deal outside the U.S., and they had a big move. Again, they've already had the big move, although I did see some analysts come out with some pretty beefy projections. Internet media, so I typically will go down the list. Here's one that looks good. Baidu, it's got to get through the 200. Sideways move, breakout, broke above the magic line, 3 kahunas in the last 6 or 7 trading days. I like Baidu here. Again, it's got to get above that 200-day moving average, and I wouldn't blame anybody who said I'm going to wait for that to happen. Google had what looked like a miss on earnings, and this is the problem with earnings trades and after hours. It looks horrible, and then that ends up closing the week at all-time highs or near all-time highs. So Google looks strong here. This is partly why the canaries are doing well. Here's Google again. Hoya, a lot of play about the great day it had on Friday, up 4%, but it's still sideways trading. Weibo has been one of my favorites. I'm out of it now. Its earnings have not turned around. It used to have pretty impressive earnings per share growth. The fact it broke above the 200, had a couple kahunas and pocket pivots coming out of a squeeze, I find that to be interesting. So that's something I might look at this week. So I am actually getting ready to go to this bar mitzvah party, so I'm not going to go through all 10 groups. I'm going to wrap it up in a few minutes, but I'll still share with you some of my picks. Qualcomm, this one really rocketed out this week, had a Bible gap up on Bible gap ups occurring on a stock with a market cap of 115 billion. It's got earnings. I guess the earnings came out, even though it said they're not out yet, on the earnings whisper sheet. So if we go to more info from the web, because I remember, I think, seeing their earnings. This not only will open up FinViz, but it's going to open up FinViz at my desired stock. And that's on the Apple's agreement. That's even better. Well, I still think their earnings, earnings came out this past week. Qualcomm looks great. I'd rather wait for it to come back, but there are rules to buy viable gap ups, as taught by Morales and Catcher. Do your reading. I've been in AMD. I continue to like AMD, and it's probably still viable. It's extended, but it's not as extended as some of the others. Skyworks has earnings this week, but you really want to buy them. And what I talked about in my meeting, and as I heard Minervini talk about at his meeting, so you want to buy stocks that are breaking out. These are extended. To me, it's a little tougher to buy, but we saw a couple last week, and if I see the pattern that I like, I'll let you know. So I typically go through about 10 to the upside, 10 to the downside, but on the weekends, I build a major watch list, and I call that watch list my consolidated buys. I put some filters on them, and I looked at 824 securities this weekend. I came up with a buy watch list, and let me just see if there's anything here that might be fun to talk about. These were the stocks that made my buy watch list. We look at what industry groups. Biotech. Biotech looks compelling here. Specialty pharma, some medical equipment and devices, and managed care. So despite politics, I did see a number of interesting plays within healthcare. Let's see if I can find some of my favorites. Now, one that I talked about last week was Repligen, and it really did not fire last week. And let's take a look at this here. When I looked at it last weekend, I thought this was one that had potential, and I put a buy stop here at 86.12. Well, it never got there. And the stock traded, and actually that buy stop would be closer to here. And now it looks like it's getting ready to go again. So I might reevaluate Repligen. I like that one. Momo, let's look at these four. Avalent Health is involved. It's actually a competitor of mine in the population health technology space. They seem to have broken out here out of a base. It's in a downtrend, so you have to worry that this isn't just a retracement and going back down. When it crosses over the magic line, I get interesting. Kahuna's mobile breakouts from a squeeze, so Evolent looks interesting. Momo has been sideways for some time and just broke out of what's been the top of that, at least top of the range since July. It's got earnings per share that are accelerating. I've been in this one and out of it. I may go back in. Here's two stocks that look like they're setting up at nice buy points. Uptrend, pullback to support. Now, I don't buy them here. I look for momentum to come in, whether it's a new buy signal, a pocket pivot, kahuna. But I'm going to sharpen my pencil and watch Paycom. Earnings are accelerating, but it's still an expensive stock. And then how about SCA? Earnings are out this week, which is an issue. But this one pulled back to the 200 and bounced, just got back above the 50. And I think that's an interesting looking pattern as well. One of the smaller technology companies that broke out this week was Maxar. Again, this stock was in a sideways range forever, and then something happened. I believe it was earnings. It's under accumulation, pays a 2.6% dividend. I have a position there. I actually had a position there for a little while. OTA. I like the chart. Not totally convinced because of how far below the relative strength versus the S&P is below its moving average. That's what I call the magic line. I like to buy these things as they cross above it. So it's sitting at a confluence of moving averages. It had my buy indicator come in Friday, a pocket pivot, a kahuna. That one's interesting, but I think it's sort of one of these a little bit more dangerous patterns. So I can't just go on an airplane and put a buy in because it kind of looks to me like it's one of, oops. All right, let me try this again. Things, and is it going to break above below? I don't know. So, but that one looks like it's setting up to do something. AbbVie has been one of my favorites. It's finally broken out. I've been talking about this probably here for 2 months. It's a biotech. It's a large pharma with a dividend that has a portfolio like a biotech. eHealth is another beaten down stock that looks like it's coming to life, breaking back up here. You can see the big bounce on the weekly charts to the right. I mentioned Shopify. On the daily, it looks like it's a long bouncing off the 200 with a new green candle low. And on the weekly, I'm trying to decide if it's not a short as it, so again, I'm not going to jump in until it sorts itself out. But are we starting a, oh, wrong one. Are we now in a downward channel? But this is one that every time I wanted to write off, I wished I bought it. So I'll be watching it this week, and I want to talk about what that means in a couple seconds. Eventbrite, another stock that seemed to be going nowhere. Now this one is interesting. You have the magic line and a kahuna on the weekly, sideways stock breaking out above the 200, a Bible gap up, a mobile breakout from a squeeze, and a kahuna. Weekly and daily bullish doji reversals. This is interesting. Eventbrite is one that I'm going to be looking at. It's an IPO, so it probably increases the risk and reduces what we know about it. Ambarella is an old name. I like pullbacks and then a breakout. Not yet, but it's something I'm going to watch. And I think on that note, I'm going to say how I watch these. So, for example, Clarius, downtrend, broke above the 200 here, crossed above the magic line, looks like it's in a new uptrend. I might be interested in it. But what I do, I can't follow 57 stocks on my phone all day long, plus my shorts. I will create a watch list, which I've done. I will populate TradeStation with that watch list, and then I will look for signals to occur during the day or in the evening, and I will be monitoring for some of the Q signals, my favorites, my squeezes, my mobile breakouts, pocket pivots, Bible gap ups that might occur in the stocks that I'm looking at, and then I have the opportunity to find these signals during the day and make trades. If you're a thinker swimmer, they use Market Watch, and so I've built into Market Watch my HDDs, my kahunas. This is a trend indicator. The nice thing about Thinkorswim, if you like John Person stuff, his PPS indicators are free here. On TradeStation, you have to buy a package. You can see them right there. So we're getting to a point where we're probably going to get extended. I think we saw that with those backseat divergences. We saw that with the high jump bar in TradeStation. But markets can get higher before they roll over, and I wouldn't be jumping to the exits without seeing some signals. But I am a little cautious that we might see it. I'm still long. I'm still bullish. Hope you have a great week, and see you next week. I'll probably have a chance to do this. We'll see you soon. Thanks. And by the way, keep subscribing. That way, I don't have to post on any boards to let you know. Thanks. Have a great weekend. Bye.